Markets are looking higher this morning. Take a look. Futures indicating a gain at the opening of trading. Markets have been on a tear this year. The major averages are up better than 5% just in 2017. But, of course, the gains go back to Election Day. Nicole Sherrod is with us today from TD Ameritrade. And you've got data, Nicole, that is tracking what investors are doing, how they're feeling, how they're allocating capital. Tell us.
Yeah, for a long period of time, I think the only way you could really gauge investor sentiment was to look at things like the AAII survey. And all that really is a poll to 300 people asking them what they think about the market. So we kind of looked at our database of 6 million clients and realized this is kind of a treasure trove of facts. So we were able to actually debunk the myth that the retail investor is the dumb money. They're actually quite sophisticated. My belief is technology is the great equalizer because they now have access to news and information that the professionals have access to. Wow. They've been participating in this rally every step of the way. And since Trump has been elected, they've been dialing up their exposure to the equity markets.
Okay. So financials have been among the best performers. Do you see financials as the leading beneficiary of that?
They've been increasing their exposure to the financials, in particular Bank of America and JP Morgan. The number 1 and 2 stocks held by our client base are Apple and Facebook. They have over $15 billion invested in Apple, over $5 billion in Facebook.
Does that suggest that those stocks are, that individuals have too much money in these too few stocks? And are there any that you think, based on valuation, might be over-owned, like Tesla, for example?
They've got about roughly $1 billion invested in Tesla. I think the thing with retail investors is they tend to invest in products that they know and love.
Like the
Apple,
old Peter
Facebook.
Lynch adage.
Exactly.
One legs, pantyhose.
Yeah.
Right.
Exactly. And like I mentioned before, they've got a lot of great technology which allows them to keep on top of things. What I loved seeing last week as the markets pushed to higher highs, they were net sellers of individual equities, but they rotated into equity ETF funds. So they're still bullish on the state of the U.S. economy and U.S. companies, but they're diversifying their risk across a broader spectrum.
That's super smart. You reduce your individual stock risk, but you still have stock ownership.
Because you want exposure to this market.
Yeah, exactly. That goes to the sophistication that you're talking about.